Hey, all you stock market winners out there. Welcome to the February 22nd edition of Wall Street Winners. Let's dive right in. And listen, let me just get right to the point here. It's a bear market. It's a bear market. So we got the rally back up into this zone here. We formed a double top. We broke the double top. It was a legitimate double top. And we're about to hit the objective of the double top. But I think we're going to continue to head lower. And of course, the rest of this video will explain why. But it's a bear market, just period. Bear market, period. Don't even think about it. There's no hope for the future. You might as well just sell short everything. Okay. And buy more ammunition. Okay, let's get on with it. So Dow Jones, more selling pressure coming into the market. Buying pressure not down a lot, but a lot more selling pressure coming into the market. And the black line here, which is ADX, turned up. And that's a technical indication that this is a legitimate bear market. There's no choice about it. Over here on the NASDAQ, also same story basically, but purple predictor a bit more bullish over here. Seasonality, everything's neutral. I wouldn't turn bullish. We're still in a bullish period in the stock market, but I wouldn't turn bullish until my red line up here gets broken, and that's not likely to happen soon. Now, here we have right now, I'm using the red line as the most likely scenario because so far it's worked the best. So you can see that we're really in another 2 weeks of down move until we get into March, and then we have a shot at a pretty big rally, a 2-month rally. So we need to be nimble here. We can be short, but we don't want to stay short too long. So that means that let me go back. So if I go back over here to the S&P, we may not break this low down here. We may get down to it over the next week or two, but we may not break it. So we're going to be we're going to have to stay very close to the market here because we may take all of our profits on for fully paid up members where we have some short positions, etc. Over here, asset allocation, money's going out of the stock market, and we have a flight to quality. It's going over into the bond market. And even inside the stock market, let's take a look at our RISKDICATOR. The RISKDICATOR started to come down as well, which means that they're not buying sexy NASDAQ stocks. They're buying consumer staples again. They're buying Procter & Gamble and Kellogg's and stuff like that. And they are killing so many of these tech stocks. It's unbelievable. Just take a look at FB, Facebook. You might as well just give it away. In fact, some of these stocks are getting so cheap. I think we're going to make some tremendous money in the next bull market in tech stocks because they've been hammered so much lately. Global shares, basically the same as the U.S. Now, let's stop here for a second on the yield curve. The yield curve is, you can see over in the lower left-hand corner, it's very sharply positive, and then it just kind of gets flat. Not the best for the market. Bonds got a little bit of a rally on. You saw that on the asset allocation. Bond key factors. You can see that the chart itself. That's the CRB. It's still saying higher yields. Gold is saying higher yields, but we saw the 10-year Treasury in Germany hook down a little bit, and that caused the bonds to rally just a little bit here. But I don't think it's sustainable. Dollar, same price we were in November. Gold, on the other hand, has really perked up a lot. We broke this low. Now we've broken this low. I'm not quite ready to get long, but this is the best it's looked in a long time. There are still some negative factors there. Let's take a look at our gold key indicators. This is pretty flat. This is only slightly bullish. This is mini bullish inside of a longer term bear. So our indicators are not telling us that this is going to be a bull market. So we cannot get into the market. This can just be like a short covering rally or something like that. Crude oil. As I've been mentioning, I think we're suffering. We're going to suffer here. We're not going to get to 100 yet. You can see here we even broke these lows here a little bit, but then rallied back up above there. The momentum of the market, that's the green line. It's slipping lower. But I think we're just going to stagger around up here. I don't think we're going to go much anywhere at all, really. Bitcoin is going to suffer along with the stock market. It's now become an ETF on the stock market, as far as I can tell, because I think more and more mainstream investors are in it. It's going to be less volatile and more correlated to the stock market. I can't get excited about going either way. I mean, generally it's a bear market, but on the other hand, I mean, really, who cares? I know you care because you have a lot of Bitcoin, but I can't get excited about trading it. Okay, freebies, you know what you need to do. Just go there right now. Just don't even think about it. Just go there right now and sign up for a fully paid up membership.